Now, because I've been investing in the stock market for around 8 or 9 years now, buying dividend-paying stocks and ETFs basically every single day the market's been open. I have a massive collection of different names across my long-term portfolio, and where I'm at currently in my investing journey, there's really only a handful of ETFs that I sort of purchase on an ongoing basis just because of what I'm looking for long-term from here. Now, that doesn't mean that if I were to start over tomorrow and build out a brand new portfolio, that I wouldn't do things very differently. Now that brings me into today's video where we are going to be building out a 5 ETF portfolio that's not only going to offer a ton of income potential from day one, but also a ton of growth exposure too. Now this 5 ETF portfolio is sort of going to cross out every single thing most dividend investors are really looking for, being things like diversification and, like I said, a ton of income but also some growth. So if you want to see which 5 ETFs I would use to build out a $100,000 portfolio, knowing what I know now after investing for almost a decade, well, then make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, number one, the first ETF that I would include in this 5 ETF portfolio, again, a $100,000 portfolio, $20,000 invested into each. I would first 100% include DIVO, the Amplify CWP Enhanced Dividend Income ETF, which is a super high quality ETF that offers a ton of income potential, some growth, some dividend growth. Not to mention this ETF has returned around a steady 12% per year. This is since 2016. Now, DIVO basically buys into a small basket of high-quality dividend-oriented stocks, but then along with that sells covered calls and individual names. The fund has almost $4 billion inside of it, but even still, I don't see DIVO really talked about all that much across the community for whatever reason. Now, DIVO's expense ratio is going to be a little bit high at 0.56%, but again, it's actively managed, and this ETF is going to offer you 4.8% yield right off the bat. Now, like I said, because DIVO buys into a small basket of individual stocks, names like Caterpillar, names like Visa, super blue chip, high quality names if you ask me. But then along with that utilizes a tactical cover call strategy. Like I said, this ETF is going to offer just about 5% yield right off the bat, which is much more than you're going to get compared to the general markets. Now also, like I said, DIVO over time has increased their dividends that are paid out on a monthly basis just slightly, which is honestly fine because with a 5% starting yield, what more can we really ask for? DIVO's also grown over time, it's relatively low beta, so 100% certain I would include one sliver of this overall portfolio, and it would have DIVO written all over it. The next portion of the $100,000 portfolio would have to include 20% or $20,000 worth of the Schwab US Dividend Equity ETF, or my personal favorite, SCHD. Now, I've talked about this ETF so many times on the channel, you guys probably already know exactly everything about it, but the reason I love SCHD personally is because it's super cheap to hold on to with a total expense ratio of 0.06%. It's well diversified with around 100 different stocks inside of it. It's potentially tax efficient, it's grown like crazy over time, but maybe my favorite part about SCHD is the fact that the dividend over time has grown significantly. Now, even though investors like myself are only going to see around a 3.6% starting yield when it comes to SCHD, this ETF does not have a cover call overlay, so there is going to be an uncapped amount of growth potential, but along with that, the dividend growth, or how much more and more in dividends this ETF pays every single year, has been outstanding. Now, on average, over the last decade or so, this ETF has paid around 10%, 11% more year after year in dividends, so that's quite a raise for your portfolio. Now, for all those reasons and more, I would have to include SCHD in this $100,000 portfolio because honestly, this ETF solves for almost everything most dividend investors are looking for. The next position, this one might sort of surprise you guys. I would include the Vanguard High Dividend Yield ETF, VYM. This might surprise you because I don't really talk about VYM all that much, and I really don't own much of VYM across my portfolios. And honestly, I can't even remember if I have more than 10 shares. Now, the reason I don't really own VYM is just because I own SCHD and because I personally like what SCHD does a little bit better. But the reason I would include VYM is because, of course, it's cheap to hold on to. It offers a 2.5% yield starting, so not horrible, not necessarily great. It's offered some dividend growth historically, but one of the main reasons I would include this ETF in my portfolio is because of this right here. There's so many different stocks inside VYM, and especially knowing what I know now after almost a decade of investing, especially if I were to restart and build a portfolio right from scratch, I would want to have a ton of diversification personally. Now, I know some investors out there, maybe some of you guys watching this video are saying, well, there's no need for that much diversification. Some of you guys might even only own a few names of different stocks or ETFs in your portfolio, but just knowing myself as an investor and knowing what I'm looking for, as far as a portfolio composition, I know that I'm going to want some diversification, but along with that, I want dividends, I want exposure to dividend growth, and of course, growth potential, which VYM has offered all that. So for those reasons, simply, I would include a sliver in this long-term portfolio and have VYM 20% of it. Now, the next two positions, the final two positions in this $100,000 portfolio that I would be building if I knew everything that I know today as an investor. Again, almost dividend investing for a decade. And by the way, if you guys are still watching this video, make sure to subscribe. I never really ask that of you guys, but please subscribe. The next portion of this portfolio would have to be JEPQ or the JP Morgan Nasdaq Equity Premium Income ETF. And this is just simply because this ETF offers Nasdaq 100 exposure, which I personally do want exposure to, but because the Nasdaq is pretty volatile, I want to have some Nasdaq 100 exposure, but through an income-oriented, less volatile strategy. Which JEPQ is exactly that. This ETF has offered a ton of income every single month since it came out. And honestly, I've owned shares of JEPQ basically since inception. But depending on what time frame you look at, JEPQ is going to yield anywhere from 8, 9, 10, 12%. So with a $20,000 investment into JEPQ, you're going to actually be able to receive a good amount of cash flow right from the jump, which is pretty nice. Now, I know that to be certain because I personally have around $25,000 worth of JEPQ in my portfolio as of right now, and I receive a good amount of cash flow every single month. Now, like I said, because I want Nasdaq 100 exposure, but through an income strategy, one of the best to do it across the entire market, if you ask me, at least so far based off of performance and everything else, JEPQ has definitely been the one. Now, the last final position, the $20,000 position left would have to go to SPYI or the NEOS S&P 500 High Income ETF, an ETF that pays monthly, distributes around 12%. This ETF has an expense ratio, but it is actively managed, and this ETF buys into the S&P 500, but then you guessed it, implements a data-driven call option strategy, which is how it yields so high. Now, the reason I would include SPYI in my portfolio personally, and side note, I do actually own a ton of this one also, I would definitely add some of this one because of this ETF strategy, which I've talked about so many times before, and how this strategy, at least for me personally, almost matches perfectly with what I'm personally looking for. Now, the investment objective really says it all. It says the NEOS S&P 500 High Income ETF seeks high monthly income in a tax-efficient manner, which who doesn't want a high amount of income in a tax-efficient manner, but also on top of that as a bonus with the potential for upside appreciation in rising markets. Now, SPYI is never going to outperform the S&P 500 if we're just looking at price return or price performance, but if we look at total return, it's probably going to perform pretty similar to it, but offer a ton of income every single month. Now, like I said, I own a ton of shares of this one. It's been absolutely amazing since inception, at least for me. So the last position in this 5 ETF portfolio that's going to offer you a ton of income, a ton of growth, and a ton of dividend growth would have to be ticker symbol SPYI. So there we have it, guys. Those are 5 different ETFs that I would include in a $100,000 dividend portfolio if I were starting over and I knew everything that I know today. Now, the good thing about the stock market is your long-term portfolio is going to be a constant work in progress. You can always sell out of things, buy new ETFs, buy the dip, or whatever the case might be. But as far as a 5 ETF portfolio, those are 5 amazing names for all their own reasons. Now, before I go, I do have one last question for you guys down below. If I were to ask you to build out a perfect 5 ETF portfolio for a dividend investor, which 5 names would you have? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.